Welcome back. I'm Dan Kraus, the founder of the Stock Investor Studio, and this is game-changing stock market news of the week. My take on this week's stock market news that really matters. This is episode 105 for the first week of July 2021. And in this week's episode, we're going to be talking about Bitcoin, Boeing, Ford, General Motors, also going to be talking about United Airlines, big US banking stocks. We'll be talking about Facebook and Instagram, also a little bit about the casual dining restaurants, a huge IPO. In fact, one of the biggest in the last decade here in the US is Didi, which is a Chinese version of Uber and Lyft. We'll also talk a little bit about Foot Locker, Robinhood IPOing coming to the market very, very soon, Virgin Galactic. Also talk a little bit about electric vehicle manufacturers, namely Tesla, NIO, and also Nikola. If you haven't already, please subscribe to my YouTube channel to hear about these videos. You'll be notified if and when they come out. And if you like this video and you get some value from it, please hit the like button. It's very, very helpful. Right, moving on. Let's talk about US stocks. Now, stocks have ended the first half of the year with a massive, massive bang. Technology companies continue to post massive gains while other industries hard hit by the pandemic are also continuing to strongly recover. So the S&P 500 is now up about 16% thus far this year, which is the second best first half performance since 1998. Behind only 2019's 17% gain. So pretty much on par. So it's been a massive first half of the year. So what is lifting the market higher? Almost every sector has been ripping, but 6 of the top 10 S&P stocks that are really making big moves are all in the energy sector. The financial sector is the year's second best performing in the overall S&P 500. Up about 25% year to date, while the real estate sector comes in at a close third place. Right, now the Dow Jones Industrial Average also marching much higher, up about 15% this year. What's really driving markets? Well, there's robust economic growth in the overall US. There's really strong corporate earnings. There's also really low interest rates. Plus you have stimulus money and investors keep piling into equities and stocks, right? So now a lot of stocks have become quite expensive from a valuation point of view. And this has become a real growing concern to see what happens in the second half of the year. So we've seen a really, really big rally and there's tons of optimism priced into the market. So just a small word of caution, at current levels, don't overexpose yourself and make sure that you are managing your risk accordingly. So very, very quickly, let's talk about this year's biggest gainers thus far. So we've got Marathon Oil. Really led the way, almost doubling their stock price so far in 2021. Also shares of Ford up nearly 70% year to date. General Motors up about 45% year to date. The retailers in the past few years, as we all know, have really struggled, bouncing really hard this year. The likes of L Brands also almost doubling, announcing that they're going to be splitting their Victoria's Secret brand from the Bath and Body Works brands. Also huge new marketing campaign happening at the likes of L Brands with Victoria's Secret, which has been a massive success. Stock is up about 90% so far in 2021, so keep an eye on retail stocks. Another retailer, Gap, up about 60% so far this year. And tech company Nvidia up more than 50%. What a stock. Wow. I used to own that a long time ago, but I sold it way too early and the stock has just continued to trade higher. Just shows you the importance of holding on to good stocks and sticking with them for the long term. Just remember the two biggest concerns for the market this year are still inflation and of course the possibility of the Fed increasing interest rates or becoming more hawkish on rates. So drop me your thoughts, guys, and let me know your comments and what you're thinking about what the market does in the second half of this year, and what stocks or sectors that you really like. Let's get into a bit of a debate. Right, moving on to stock specific stuff. Europe is on a mission to have zero emission vehicles. They want all cars sold by 2035 to be fully electric. Right now, that means that the end of the internal combustion engine, so gasoline powered cars. That also means the end of plug-in hybrid cars. So this is going to force many of these large car manufacturers to start working much faster and smarter to reach these goals, right? So who is doing what? This is why it's important. So Germany's Volkswagen, they've just announced it'll stop selling all combustion engine cars in Europe by 2035. They aim at having the entire region fully electric, or account for about 70% of total sales by 2030. Now that's not that far away, that's like 9-10 years away, so not a lot of time to reach these goals. Also, both Ford and Volvo also said that they only want to sell EVs, electric vehicles, in Europe by 2030, while General Motors will stop building gasoline cars by 2035. Wow, so that's quite an interesting development, and to see how these cars are reshaping the way they make cars in the future. Overall, in the US, California has banned the sale of all gas-powered vehicles by 2035, and a dozen of other states are looking at similar legislation. So what does this mean for EV manufacturers? That's where this is important. Who do you want to be exposed to? That's why the Tesla share price has gone through the roof, because everyone's pricing it in, think that they are going to dominate, and they are already dominating. They've been early on the curve, and they are already selling hundreds of thousands of vehicles. And will they continue to dominate the EV space, or will the other manufacturers catch up? That's a big question that we are looking forward to seeing. Right, moving on. Boeing, a little weak this week. Why do I bring this up? Because I've mentioned it a few times in my past few weekly updates. Some really good news out of the company, but this week, not so much. So news that it is unlikely to secure the FAA certification for the 777X jet until at least mid to late 2023. Now, a lot of investors and analysts were hoping for that to come through earlier. Or looking for an earlier return of the 777X. Now, nonetheless, there was some good news that came out at the latter part of the week. United Airlines announcing its largest ever order this week on Tuesday, consisting of 270 jetliners from both Boeing and Airbus. Now, the airline, United Airlines that is, also announced that it was hiring close to 25,000 new employees for their new planes, and that it would really revamp its interiors of the overall plane to provide much bigger seats and also more seat back entertainment within their aircrafts. Moving on, if you're a dividend yield investor, good for you. Now, big banks this week boosting their dividends following last week's results from the Fed stress tests. Now, remember that the stress tests are really done to check how US banks would or could cope if there were to be another large financial crisis. Do they have enough money to survive on their balance sheets to get through another big crisis? So, welcome news this week was the fact that US banks are going to be boosting their dividends after a successful round of Federal Reserve stress tests. Now, why this matters? Because they've needed permission from regulators to raise dividends or buy back shares since the 2007-2008 financial crisis. Earlier this week, Goldman Sachs announced that it planned to increase its stock dividend by 60% to about $2 a share. Morgan Stanley also announcing plans to double their dividend to about 70 cents per share. JP Morgan Chase increasing its dividend by up to $1 now a share. Bank of America also moving up its dividend to, I think it's 21 cents a share. Wells Fargo doubling their dividend. So you guys can see the trend here. So if you're a dividend income investor, banks are paying bigger dividends, means more income for you. Right, moving on. Facebook just joined the $1 trillion club after winning a massive court case. Now, why this matters? Because it could have positive implications for other large cap tech stocks. Now, on Monday, a federal court dismissed the Federal Trade Commission's antitrust complaint against Facebook, looking into their competitive behavior. Now, shares of Facebook popped on the news, bringing their market cap above $1 trillion for the first time. So it joined the likes of Apple, Amazon, Microsoft, Google, in the ranks of publicly traded companies that have a market cap, of 1 trillion or more. Some of those actually have a market cap of 2 trillion or more. Now, also on Facebook, Facebook app, Instagram, owned by Facebook, of course, is now testing dramatic changes to its overall platform. They want to introduce things like showing users full screen videos on their feeds, as well as content from accounts that they don't already follow. Now, why make these changes? Because there's really serious competition out there, the likes of TikTok, which is owned by ByteDance, is dominating. You also have YouTube, which is a huge competitor and threat to them. And there's lots of new startups coming into the space, right? So the head of Instagram was saying that they are no longer going to just be a photo sharing app, and they're really going to do a whole lot of new things which they'll introduce in the next coming months. So keep an eye on that, how that changes the whole Facebook, Instagram business. Next up, we're going to be talking about casual dining restaurants. So spending at casual dining restaurants is going through the roof, literally, and trends continue to head in the right direction in the restaurant space, according to a lot of different research data. Sales are massively up across the board. So keep an eye on stocks like IHOP and Applebee's parent known as Dine Brands, also Cheesecake Factory, and also the parent of Outback Steakhouse, which is Bloomin' Brands. So all of these stocks have seen really good gains through 2021, but I think keep these stocks on your radar. The economy is just so strong and spending is robust. So, sales trends, they may well continue for these casual dining restaurant stocks. Next up, we're going to talk about Chinese ride-hailing giant Didi. They IPO'd this week. They are the Chinese version of Uber and Lyft. Now, this is important because it's one of the biggest IPOs here in the US in the past decade. Now, the stock has a market cap of about $66 billion, which is smaller than that of Uber's $95 billion, but larger than that of Lyft, which is about $20 billion. Now, Didi has not yet reported an annual profit, but based on its 2020 revenue of about $21 billion, that would have a price to sales ratio of approximately 3 times, right? Now, Lyft's price to sales ratio is 9.4 times and Uber at 8.6 times. And again, Didi at 3.1 times. So it just shows you that, is this stock perhaps cheap? Could they grow into a much bigger business? And if you look at the numbers are massive. Listen to these numbers. So users outnumber the number of US total citizens overall. So it has a much larger user base and addressable market than Uber and Lyft. Now, Didi has about 493 million annual active users, about 377 million of whom are in China. Now, this means that it has more users in China alone than there are people in the US. Now, this is about 3 times as many users that Lyft and Uber have combined. So a really big market. So keep an eye on Didi because investors will probably be curious to see, how they do as a publicly traded company relative to Lyft and Uber. Lyft is down about 20% or so since it debuted in 2019, whereas Uber is up about 20% since its debuted in 2019. So before we move on, also just this morning, China announcing that they are going to be doing a cyber investigation into Didi's business, and the stock was down massively, about 10% or so this morning. So keep an eye on Didi. Moving on to Ford this week, saying that they are going to idle or reduce the production at 8 of its plants. That includes 6 plants here in the US over the next couple of weeks. This is due to the semiconductor chip shortage. Now, affected products include the F-150, the Mustang, and the Explorer, and Ford was saying that earlier in the year it expected to lose about 50% of its vehicle production in the second quarter due to the chip shortage. Also talking about cars, Chinese electric vehicle maker NIO, a lot of retail and Robinhood traders and Wall Street Bets groups, they love the stock. They said on Thursday that its deliveries rose 115% in June on a year-on-year basis. Now, the company delivered just over 8,000 vehicles in June, its highest monthly number ever. Now, June is the first month of increasing deliveries for NIO after 4 consecutive months of decline. So keep an eye on NIO because on July 9th, in next week, NIO will hold a Power Day event. It announced this event, which will be focused on EV batteries and charging. It announced this earlier in the week. Now, also on Wednesday, NIO announcing that they're adding battery swap stations in China and also added a ton of new robots to its factories as the EV race really intensifies. Speaking of EVs, Tesla, which dominates China's premium EV market, reported Q2 deliveries today, which was just over 200,000 cars delivered for the quarter, which is a huge number and another quarterly record number of deliveries for Tesla. Moving on to Nike and Foot Locker. So last week, Nike reported excellent numbers with massive sales globally. Results were well ahead of expectations. A huge beneficiary and one to watch is Foot Locker. Now, I'm seeing a lot of people talk about Foot Locker and the stock. They could benefit massively from the partnership with Nike. Now, the stock has been strong, but I just wonder if there's more to go in Foot Locker. I'm seeing upped price targets on Foot Locker. The Jefferies investment banking analyst earlier this week stuck an $80 price target on the stock. Currently, the stock is trading around $62. Now, also on Foot Locker, Nike has been key to their growth, but they're also diversifying, other brands. They're seeing success with the likes of Crocs, Birkenstock, also seeing a lot of success from the likes of UGG and Vans. And I don't own Foot Locker, but I'd like to. I might just do a little bit of work on the stock. It seems interesting and perhaps one to own for the long term. Onto Robinhood. They're going public. They plan to trade under the ticker HOOD, which is HOOD, which will be listed on the NASDAQ. Now, the online broker plans to set aside up to 35% of shares for individual investors. Now, usually when companies IPO, they only allocate 10% or even less to these types of individuals. Now, if you want in on this IPO, investors have to sign up to buy the shares on its new platform that lets users access IPOs before they start trading. Now, no real numbers are out at the moment. We don't yet know the exact expected IPO date. We don't know the expected price range. We don't know the number of total shares in issue. We also don't know the actual valuation, the total market cap of the potential IPO, but some say it could be worth as much as $30 billion. So some quick interesting numbers out of Robinhood that they disclosed. They now have 18 million funded accounts as of March, which is up from 7 million just a year ago. Monthly active users totaled 18 million, and assets under management shot up to $80 billion. That's from 19 billion just a year ago. So massive business that has grown unbelievably well. Now, revenue really surging. It's made a profit for the first time last year as new traders really flocked to the stock market during the pandemic, and looking forward to seeing how that IPO goes. Last stock for today, last thing we're going to talk about is shares of Virgin Galactic. They're up about 30% this morning after the company said it was looking to launch their founder, Richard Branson, into space on the 11th of July. Now, that's really big news because that comes well ahead of plans for Jeff Bezos and his company, Blue Origin, to launch on July 20th. So it's a race to space, really. Now, be careful with these stocks. I think they're going to be massively volatile the next coming months. But if you're a really long-term investor and you like this type of risky stock exposure, by all means, take a look at them. So that's it for this week. I hope you've enjoyed the video. Please subscribe to my YouTube channel. Hit like if you've found value in this video. And also, if you want to learn all about the stock market, check out my website, www.stockinvestorstudio.com. Have a great 4th of July weekend. We'll see you next week.